It's important to have an accounting system in place so that you can track your income and also track your expenses. If your accounts receivables increases by a lot in a quick time, it can tell you that you are growing at a fast pace. If that is the case, it is very important that you review your internal processes. If you're growing and you're receiving more funds, but you don't have the resources allocated to receive those funds and actually turn that cash into funds that you can use to operate the business, then the business is going to suffer.
I think the best practices for managing receivables, one, is to make sure that you're billing in a timely manner, that you're monitoring that you've gotten paid. You look at the exposure you may have to individual customers to ensure that you don't have an increase in the risk level with those clients. And then, has there been any bad debt history with that client, so that you need to think about the terms the next time they come knocking on your door and you're thinking about making a big sale to them. The real challenge is trying to optimize the levels of cash, not have too much, but certainly not have too little in order to meet the obligations of the business. There's several things that you ought to think about when you're looking at accelerating the cash into your business. Certainly the easiest form is to make sure that as many payments as possible are getting converted quickly. You may want to encourage the people that are paying you to pay you via credit card. Now, you may have an interchange that you're going to wind up paying on that, but you may get the funds a week earlier than otherwise you might have, maybe 2 weeks earlier. And so it's a real premium. You know you've got good funds, and you don't have to worry about potentially having taken a check that's going to be returned in SF down the road.